Hello traders, Gary Wagner here, just after 12 o'clock in Honolulu, 6 o'clock in New York on Wednesday, May the 4th, 2022, and this is the Daily Report for gold and silver. Today, the Federal Reserve concluded its May FOMC meeting. This was followed, as always, by a statement and a press conference by Jerome Powell. It had a very positive effect on U.S. equities and gold and silver, and a negative impact on the dollar and yields of treasuries and bonds. First to gold. Gold is currently trading at $1,883.30. That is showing it up $14.80, but that, of course, is compared to the close in New York, which you can see came in at around 1867, this doji line here. This is current pricing as it trades overseas. This was absolutely affected by dollar weakness. The U.S. dollar lost almost a full percentage point, a total of 97 points, taking the index down to 102.53. Silver had a dynamic gain, and the gain was stronger than what we saw in gold because it really reflected more than anything else the industrial use of silver and the fact that equities had one of their best days in quite some time. Silver is back over $23, and that's after factoring in the current gain of about 60 cents. And finally, speaking about equities, we had the S&P rise almost 3% today. It is currently fixed at 4,300.17. The NASDAQ as well as the Dow all experience solid gains on the day. To illustrate the positive influence on stocks and gold as well as the negative influence on the dollar, we're going to look at a couple of 60-minute charts. This is a 60-minute candlestick chart of gold futures. This very long green candle begins at 8 o'clock in Hawaii. That represents 2 o'clock in New York, the time when the Federal Reserve releases the May statement from this month's FOMC meeting. You can see the effective change that had on gold, taking it from these lows just below $1,862 up to these highs just shy of $1,890. Currently, we have gold fixed at $1,883, and we had a fairly strong range in gold trading today once the FOMC meeting concluded. This next chart is an hourly candlestick chart of the Standard & Poor's 500. The long candle that you see begins at 8:30 and concludes at 9:30. Of course, 8:30 was when Chairman Powell began his press conference. This tick up represents the release of the statement from 7:30 to 8:30, and of course up until the close in the market, which came in right here. A tremendous rise in the S&P. In fact, 95% of stocks contained in that index all experienced gains in value in trading today. The only negative impact came from yields dropping tremendously on treasuries and bonds, as well as the dollar. You can see the massive drop in the dollar from the highs at 103.66 down to these lows at 102.48. The dollar settled at 102.53. This next chart is a weekly chart of the U.S. dollar index. We have been looking at this specific chart throughout this week and last week, and what we identified is two occurrences prior to current trading when the dollar traded above 103, and that turned out to be a strong level of resistance because following these highs, we had major sell-offs occur. First of all, the sell-off that occurred and ended in 2018 took the index from 103 plus down to about 88, and in 2020, approximately April of 2020, once again, we surged past 103, and we had a subsequent decline, taking the dollar index to just above 89. Now we identified a triple top or a potential triple top. While it is a little too early to make that definitive conclusion, today's action along with the week certainly indicates that there is a high potential of this particular high that occurred over the last 2 trading weeks to be a dominant high and could indicate a strong decline is imminent in terms of dollar strength. Of course, if that does occur, it will have an inverse effect on gold, taking gold substantially higher. We are looking at a screen print. It is a daily candlestick chart of gold futures. However, this was taken while trading was still open in Globex after New York had closed, but they did not adjust the candlestick for the day to what you'll see on a live chart. As you can see, what we are looking at is a long green line with a higher high and a higher low than yesterday's trading activity. We're now looking at a live daily candlestick chart. And as you can see, when we look at the day's candle, which is this doji candle, it represents trading from the open to the close, and the market closes at 2:30, which is precisely the time that Powell began his press conference. So the differential in price from that close up to current pricing at 1883 represents the reaction that market participants had to the FOMC conclusion, the statement, as well as the press conference by Chairman Powell. We are still looking at a scenario in which we could easily see gold move higher. We're acting very cautiously here because we acknowledge that there is major support between 1820 and 1828 on a technical basis. We also acknowledge the real potential that the recent low that occurred yesterday, which is just below 1853 as represented by this horizontal line, could in fact become a level of support that could effectively move into major support. And while one day does not represent a change in direction, it is certainly what we would need to see to acknowledge that. Our reason for caution is we have seen this happen recently when the market was trading lower, made a lower low on the day. We had a green candle, but it was a very, very small green candle, as we saw in yesterday's candle, followed by a solid uptick, a day with a higher high and a higher low, and it then subsequently sold off the very next day. So we want a little bit more time to confirm that we could be looking at a bottom and that we aren't headed lower in the days ahead. We will remain neutral with no active trades. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.